Hello everyone, welcome in economics class. Hope you all are staying healthy. Today we will do how to measure national income by income method and expenditure method. This video is very important for JRF, UGC, NET, economics and commerce candidate. So let's start. We can calculate national income by adding all factors of the income in form of wage, rent, interest and profit. Now the components of factor income. By understanding components of factor income, we can understand what are the factors of income. So compensation of employees, rent and royalty, interest, profit, fixed income. These are components of factor income. We understand it one by one. I will explain in brief one by one all the components. So let's start. First component, that is compensation of employees, that is divided into three different parts. First is wage in cash, second wage in kind, third employer contribution to social schemes. So what is wage in cash? Wage in cash is monetary benefit that is provided by companies to their employees, for example wages, bonus, commission, etc. Then wage in kind, that is non-monetary benefits by the companies, non-monetary benefits that is given by the companies to their employees. Listen carefully, it is non-monetary benefit that is given by the companies to their employees, for example home, car, medical and educational facilities. Then third is employer contribution to social scheme. It includes provident funds, pension plans, etc. Okay, now I will explain second, that is rent and royalty. So rent is part of factor income that is arises from our land and buildings. Rent is part of factor income that is received from our land and buildings. What is royalty? It is payment made to individuals for use of their intellectual property. And what is intellectual property? That means our inventions and ideas. For example, book authors receives a payment from publishers every time when his or her book is sold. Then third one is interest. It is amount of money lender receive for lending money to production unit. Note, listen carefully it again. It is amount of money lender receive for lending money to production unit for production purpose only. Okay, for example, a person, she name is R, okay, doing production of some goods and services. You give him some money as loan in return. In return, what do you receive? You receive some interest. Okay, here we take interest on loan taken for production purpose only. Okay, only for production purpose. Okay, next component is profit. Profit has three parts. First is corporate tax, second is dividend, third is retained earning. What is corporate tax? It is tax paid by firm to government on profit that they earn. Dividend, what is it? It is part of profit that given to shareholders. What is retained earning? It is part of profit that is kept as reserve to handle uncertain situation in future. Uncertain situation in future. Okay, now 6 is mixed income. It is generated by unincorporated enterprises and self-employed individuals, for example income generated by small shopkeeper, retailers, etc. Okay, when we add these all the components or factor of income, I explained na, that is compensation of employees, profit, rent and royalty, interest, plus mixed income. We add these all, then what we get? We get NDPFC, that is net domestic product at factor cost. Okay, so from this we will reach at national income, that is equal to NNPFC, that is net national product at factor cost. Okay, when we add NDPFC, that is net domestic product at factor cost, plus NFIA, that is net factor income from abroad, then we both had, we reach, or what we get? We get national income, that is equal to NNPFC. Listen carefully, that is equal to NNPFC, that is net national product at factor cost, is equal to national income. Okay, hope you understood. Thanks.